Assalamu alaikum everybody. Hope everyone is having a great day. So how does finance work in Islam? What are the modes of financing in Islam? So first of all, you should know that interest is prohibited in Islam because it is very exploitative in nature, and it is exploitative for both the parties because for example, a creditor gives money to someone and that someone invests money in a business and that business goes really bad, and now he has absolutely no money left even for his own food. He still has to pay back money to the lender, to the creditor. So that's very exploitative on his part. On the other hand, if the creditor, the one who gives money to somebody, and that somebody invests the money in a business, and that business turns out to be very well, and he makes 1,000 times more money than the money he took, he will still give back a very limited amount, a very fixed amount of money to the lender. So now that is really bad for the lender because he's not getting as much money as he deserves, because his lending actually led to a very profitable business, but he didn't really get that share which he should have otherwise got had it been an Islamic financing. So what Islam does is basically it promotes modes of financing in which if there's a profit, then everyone who's involved in the business, whether in terms of giving money or in terms of giving service, whoever is involved in the business gets a proportionate amount of profit. And if there's a loss, then the burden of loss is not concentrated on a single or a small number of individuals. Rather, the loss is also distributed so that it is not a burden for a few people. So in Islam, there are basically three modes of financing: Musharakah, Mudarabah, and Murabaha, out of which Musharakah and Mudarabah are the two main, and Murabaha is kind of a secondary, not so ideal mode of financing. In this video, I'm going to be focusing on Musharakah and Mudarabah, the fundamentals of Islam, the fundamental modes of Islamic financing. So Musharakah basically comes from an Arabic word which means shirka, from shirka. Shirka means partnership or coming together. In Urdu we say shirkat. So what exactly is Musharakah? It's very easy to understand. I'll give you an example, and I think that should be enough for you to understand what Musharakah is. Say there are 5 friends, who come together, and they come together to make a restaurant, to start a restaurant business. So the first friend comes and says, okay, I'm going to give $5,000 and I'm going to sit in the counter. I'm going to be the person who sits in the counter and takes the payment and all of that. So, and then the second friend comes along, he says, okay, I'm going to give $8,000 and I'm going to make pizzas, or I'm going to make burgers or biryani or whatever. And then a third friend comes along and says, okay, I might just give $500 and I'm going to sweep the floor, poor guy, maybe whatever. So each of those 5 people are coming together to start a business collectively, and each of those people are giving 2 things. They're giving their money and they're giving a service. Money and service. So this is a musharakah. So every partner is involved with their money and with the service, and there is a predetermined agreement between all the 5 friends that when there's a profit, there's a predetermined ratio that each friend is going to get this much profit. Say friend A, there's an agreement that because this friend is giving more money and more service, so he might get say 40% or 30% of the profit. Other people are giving less money, more service. Some people are giving more money, less service. So based on mutual agreement, based on mutual understanding, they will settle amongst themselves that who should get what amount of profit. As simple as that. This is Musharakah. And in Musharakah, there's also something called sleeping partners. Sleeping partners are those people who just give the money and don't give any service. So the sleeping partners' profit share is very limited because they're not giving any service. So this is what Musharakah is. People coming together collectively for a business venture, and they're giving their money, they're giving their services, and the profit is predetermined. If there's a profit, then on that predetermined basis, everyone gets a proportionate share of that profit. But in terms of loss, things are a bit different. Like in profit, there can be mutual agreement as to who gets how much of profit. If you have less investment, monetary investment, you can still get more profit, and if you have, because you're giving more service. And if your investment was more, maybe you were getting not as much profit, because although you're giving more money, you're not giving any service. But in terms of laws, all the Muslim scholars and jurists are in consensus on the point that each partner shall suffer the loss exactly according to the ratio of his or her investment. So profits can vary according to a mutual agreement, but the loss will be exactly according to the ratio of his or her investment. This is musharakah, people coming together for a common cause, investing their money and their services, and the profit is predetermined according to mutual agreement, but the loss is exactly according to the ratio of their investment. There's a lot to it, but this is, I think, enough for some basic high-level understanding. Now comes the second mode. The second mode of financing in Islam is Mudarabah. Mudarabah is basically a more refined version of Musharakah. So in Mudarabah, basically there are two parties, the Rabbul Mal and the Mudarib. The Rabbul Mal, which basically means master of money or master of the Mal, is the one who gives the money, and Mudarib is the one who does the work. So this is what Mudarabah is, and you can use the previous Musharakah example in a Mudarabah setting. So what happens is that there are still 5 friends, but 2 of those 5 friends says, we're just going to give you the money. We're going to give you the money, and the other three people, they say, okay, you're going to give us the money, and we're the one who's going to do all the work. We're going to set up the restaurant, we are going to run the restaurant, we are going to maintain the restaurant, everything. So the Rabbul Mal cannot really have much interference in their business. Rabbul Mal will give the money, and the Mudarib are the one who will basically take care of the entire business. And another important difference between Musharakah and Mudarabah is that in Musharakah, as soon as the partners mix up their capital, all the capital and all the assets in the Musharakah become jointly owned by all of the members, right? Like in the previous example of restaurant with Musharakah, everyone invested everything, money, service, everything. So all the assets partially belongs to all of them. The tables, the chair, the fan in the restaurant, the floor, the wall, the ceiling. So like it is partly owned by everyone. So everyone can in a way take advantage of that as if it was partly owned by them, because it is partly owned by them. But here in Mudarabah, things are different. In Mudarabah, the restaurant will be owned completely by Rabbul Mal. Although Rabbul Mal cannot interfere in the business, cannot interfere in the management, because taking care of the business, running the business management is the Mudarib's task, are those 3 friends who agreed to do the work. But so they'll be running the business, they don't want any interference, but they don't own the restaurant. They don't own the chairs, the tables, the fan, the ceiling, the counter, the restaurant. They don't own it. Okay, so that's another difference. Now when there will be a profit, of course there's a predetermined ratio on which there will be distribution of profit between Rabbul Mal and the Mudarib. But okay, like in the beginning there will be an agreement of definite proportion. So there will be an agreement of how much profit should Rabbul Mal get, how many there are, doesn't matter, and how much should the Mudarib get. And if there is a loss, then the financial loss will be borne solely by the Rabbul Mal, solely by the person who invested the money. They will be the one who have the financial loss. The Mudarib, on the other hand, will also have a loss, and their loss will simply be the fact that they did not earn the profit, because had there been a profit, they would have had a share in that profit. But because there is no profit, so they don't get anything. But apart from that, they did not incur any financial loss. They did not have to face any investment loss, as to say. So that's okay. That's one thing. This point is especially important because in Mudarabah, the Mudarib cannot claim a salary for their work. They cannot have a fixed salary. So if there's a profit, they'll have a profit, and if there's no profit, they're not going to say, okay, we didn't get the profit, but at least we worked, at least we tried, so we want a fixed salary. That's not the case in Mudarabah. Okay. And if the business has incurred loss in some transactions and has gained profit in others, then the profit will be used to offset the loss. Okay, and it will be used to offset the loss, and then the remainder, if there is any profit still left, then that shall be distributed among the parties according to an agreed ratio. So this was Musharakah and Mudarabah in a very, very simple explanation. Okay, just to recap, Musharakah is where people come together for a common business venture. They invest their money and they invest their capital. They invest their money and their services. They get the ratio. They get the profit according to a predetermined ratio. But the loss is not like the loss is in accordance with the ratio of their investment. Okay. And in Mudarabah, there's one party who gives the money, Rabbul Mal, and one party who does the work, which is called Mudarib, which I just recently covered. So this is the basics. Okay, these are the basic Musharakah and Mudarabah. There's a lot of details which I will inshallah cover in the following in the future videos. So, and there's another thing, there's a third mode of financing, which is Murabaha, which is not so ideal Islamically, but that is what most banks, unfortunately most Islamic banks use. So that's a topic for another video. So as for now, this is it. If you have any questions, if you have any point of views, please do share them in the comment section below. Please subscribe, and I'll see you in the next one. Assalamu alaikum.